Joining us now to discuss the Bitcoin markets is Steven McClurg. He's Chief Investment Officer at Valkyrie Investments. Steven, welcome to All About Bitcoin.
Hey, Lawrence. Very nice to see you again.
Good to see you again. So we just saw this chart from the pseudonymous analyst, goes by the name of Game of Trades. And he published a chart. He says Bitcoin has reached a turning point. He thinks it might go up. I know you're in the business. I know you got bags. But do you really agree? I mean, we just saw Bitcoin fall below $16,000 in the past few minutes. I mean, this is brutal. Is there more downside to come, or do you think, like this very hopeful chart, things might change?
Yeah, look, I think this is a very helpful chart. At the same time, we are in my opinion, the third leg of finding the bottom. The first leg was the spring when Celsius and BlockFi and Voyager all went down, along with Three Arrows Capital. The second leg was FTX, and this washout is the final leg, and it's happening a lot sooner than we thought. We actually thought that we'd probably see this in Q1 of next year, but it's happening now. But I really believe that we're forming the bottom right here. It doesn't mean that we can't go lower, but we are very close to the bottom, a lot closer to the bottom than we are to our recent top, where I believe that we can get back up to.
You know, Stephen, all those legs that you described were surprises, right? When you think about it, Terra Luna, FTX, I don't want to say, of course, there were people who said, hey, Terra Luna is a big problem, FTX is a big problem, Genesis might be a big problem. These were all things that, for the most part, took the market by surprise. Do you think the market can handle another surprise that's looming out there in the market?
Yeah, I do. I mean, and it's not all too surprising. A year ago, we got word that the Fed was going to begin to raise rates, unwind the balance sheet, enter in a period of monetary tightening. And usually when that happens, all risk assets go down in price. We experienced it in not only bonds and equities, but in cryptocurrencies. And anytime you have a Fed that goes the other direction, you are going to have a lot of leverage that unwinds. So, us and some others did see this happening. The leverage that unwinded with Celsius and BlockFi and Three Arrows that happened last summer because they no longer could support a bull market trades. We're now in a bear market. Same thing with FTX. It was a house of cards that absolutely collapsed because they couldn't take advantage of the market continuing to go up. And even now, you mentioned earlier the challenges with Genesis and its lending platform. From what we understand, there's over $1 billion in outstanding debt. And that debt is going to have to unwind here. And that's probably the last leg of the leverage that we had experienced leading up to this.
I do want to get to debt because it actually affects some of the corporate finance involved in these exchanges that are trading right now. But getting back to this, the idea that FTX might have fallen because of Fed tightening, that's not necessarily what brought down FTX's books. I mean, FTX had a lot of hot air in there, and it might not have mattered whether or not the Fed was tightening or even continuing with quantitative easing. It just seems that people weren't comfortable with the structure that was set up between Alameda and FTX. And the same maybe goes for Terra Luna, where these were kind of surprises in the market that don't necessarily sound like they had anything to do with Fed policy. But nonetheless, I do want to ask you about it because this does tie into it. Coinbase, MicroStrategies, they both have bonds out in the market. Coinbase's bonds, I believe, are trading something like 50 cents on the dollar. MicroStrategy, something like 70 cents on the dollar or so. That is a severe collapse from where they were trading before this whole FTX debacle. Do you think that generally the market is expressing a severe crisis in confidence in crypto markets, not just with the coins themselves, but with the companies that are involved in it, that are taking these big bets like the MicroStrategies, or that are dependent on it like the Coinbases of the world?
Yeah, absolutely. And when the thing though about companies like Coinbase and MicroStrategy, MicroStrategy does have a business that's outside of cryptocurrencies, that's outside of blockchain. It's a solid business. It produces revenue. It's profitable, and it happens to hold a lot of Bitcoin on its balance sheet. Coinbase, despite the fact that we've had a lot of market pullback, is still a strong business. They're still processing people trading. They still run a custody business. They run a lot of other businesses at Coinbase that are profitable and that are solid businesses. So if I was still a bond manager, which I used to be a bond manager, I would see this as an opportunity to actually purchase the bonds of those two companies. And worst case scenario, the companies go down, and as the bondholder, you become the equity holder, and you get to take over one of these two solid businesses. Best case scenario, the markets come back, and you realize quite a bit of return when that spread compresses and you're trading back at par, or when these bonds mature. So I think it's a great opportunity to buy bonds in those two businesses, or any other businesses for that matter, that might have some exposure at this point in time.
So now, Valkyrie, you guys laid off about a third, 30% or so of your staff back in June. This has been a tough time in general for crypto over the past, and not just for crypto, to be sure, also for tech, a lot of layoffs going across the board. How are you guys able to weather the storm? Are you able to weather the storm right now with FTX?
Yeah, absolutely. So when we started noticing problems in the spring, we started making mini cuts, knowing that markets go down. Our business is revenues based on our AUM. So as our AUM drops due to the market and our revenues go down, we've taken pretty swift action to cut our costs so that we can weather the storm. So not only are we doing that, we're also trying to make smart investment decisions. And for the last year, we have been preparing for a bear market, whether it's going risk off in our active portfolios, or calming our cost basis. And to address our recent layoffs, really what we did was we're restructuring our distribution team. So in a bear market like this, there aren't a lot of people allocating, and we're restructuring to a point to where we actually can look to third-party distributors that we're currently talking to that can do the distribution for us, as opposed to in-house distribution.